Welcome to Knockout Crypto. Thank you for following our channel. We are on YouTube, Twitter, and Instagram. Twitter, you can follow us there for our most up-to-date information. Also on Instagram, and we are YouTube. I want to bring a video to you guys. Before we start the video, I want you guys to go ahead and like the channel, support the channel, subscribe, all that stuff. But this bear market has lasted about 9 months. I saw an interesting chart today about the Bitcoin. I want to talk to you guys about Bitcoin market cycles and the length of this bear market. So I want to go over the time that Bitcoin has been around and some of the Bitcoin's major 3 market cycles and what we can learn from these market cycles and how we can trade them. So we had in 2011, we had the first Bitcoin bull market, one of the first ones, Bull 1. It lasted 7 months. And I thought I'm going to send a shout out to Striving Yogi. This is a very good chart he put together. I want to give him credit for putting this chart together. It's a very good chart. Bull 1, we had 7 months, and then we had a bear for 5 months. Then we had a Bitcoin bull for 2 years, from 2012 to about 2014. And we were up 544%. And then we had a bear market, which was half of the bull market for 1 year and 1 month, and we lost 85%. Then we had our third bull market, starting from July, looks like around July 2015 all the way up to 2017 December, lasted for 2 years, 11 months. Now this bear market that we've been in, bear 3, has been about 9 months. As you can see, usually the bear is shorter than the bull, so that's good news because we're so we almost had a 3-year bull market, and the bear is 9 months. So hopefully the bear is shorter than the bull, and we could come out of this. But what can we learn from these Bitcoin market cycles? Bitcoin market, and then it has a bear market. What can we learn from these cycles? Usually these cycles last about the last 2 bull markets lasted longer than 2 years. The bears lasted 1 year, 1 month, and 5 months. So what can we learn from these cycles, and how can we trade these cycles? Let me give you. I was reading a few articles about the Bitcoin market cycles and how cryptocurrency market behaves, and it's a cycle. So BTC usually leads the bull rally. Top altcoins follow behind Bitcoin. The majority of the altcoins rally behind Bitcoin and top altcoins. Huge correction begins. BTC corrects, new floor price. Majority of altcoins follow, new floor prices as well. Drought for months to a year or 2. Crypto space waits for a huge event hype to build momentum from. Rinse, repeat. As you can see, this chart showing the crypto market cap versus the .com market cap. So I think what's going to happen, as you can see before, Bitcoin is going to continue to rise. So the market rally for Bitcoin, the market rally for crypto always starts with Bitcoin. So Bitcoin leads the bull rally. Through the FOMO, the fear of missing out occurs. Non-stop media news coverage. Notable Bitcoin crypto figures on television. Traditional finance experts analyze Bitcoin's trends. Crypto Twitter explodes. New mainstream investors come to Coinbase. Coinbase loses. Now, when this happens, Bitcoin will reach an all-time high. People are in a stage of euphoria, more hype, more mainstream investors pouring money into crypto, more figures being interviewed on television. Self-proclaimed Bitcoin and crypto experts coming out of their shells. Bitcoin price somewhat stabilizes. This time it's above 1,400. I told you so. People come out. A handful of solid altcoins rally behind Bitcoin. Ethereum and Litecoin leading the altcoins at this time. The top altcoins somewhat stabilized, also reaching new all-time highs. The majority of the cryptocurrencies follow. Majority of crypto, including Bitcoin and top altcoins, price stabilized. People settle down. Hype fades. Crypto, social media, news media show signs of slowing down. Millionaires and notable crypto figures come out and warn people the dangers and risks involved with investing in cryptocurrency because they have nothing to say. And then we have this huge correction. Bitcoins and altcoins start trending down. Panic sell continues to fluctuate for weeks to months until finding its new floor price. Usually is nowhere near its all-time high. Bitcoin's first biggest rally was 1,000. When correction started, it went down as low as 200 and finding its new floor price at 400 to 600. Now you have a crypto depression, a drought for months to a year. People start regretting not taking profits, not even 30% of their portfolio. People complaining at ICOs and teams because the price is not moving up. Lots of angry people in crypto when we're all in a state of depression. Then back to step one, which is Bitcoin leads the bull rally. So we're in crypto depression right now. We're waiting for Bitcoin to lead the bull rally, and are there signs that Bitcoin are going to lead the bull rally? Well, it seems like Bitcoin has found a floor between that 5,800 to 6,000 range as a floor, and we're going to see if that, if that holds and what happens from there. This is another article I found about crypto market cycles. How back in Bitcoin value, October 16, 2013, Bitcoin was 150. Then November 30th, 2013, Bitcoin went almost 10 times its value to $1,150. And then in December, it was 560. What was that? We all remember the used Bitcoin run at the end of 2013, or to give it a more common name, the 2013 bubble. I'm not saying whether it's right or wrong to call it a bubble, but I can tell you it was all to do with market cycles. After 2013, the price of Bitcoin dropped as there seemed to be one long correction. For months, we experienced a long period of consolidation and capitulation and a downtrend in October 2015. Wow. So we went from, they went for almost 18 months, 19 months of a bear market. Bitcoin chart 2013 to 2015. Fast forwarded to today's market. Bitcoin had a huge rally when it crossed the 500 to 600 mark in the middle of 2016. There, the only way was up to 20,000. After touching the peak, there was a quick 2-month drop back down to 6,000 on February 6th this year. This was the recorded low as of this writing. When we take a closer look at the Bitcoin chart, there's no dispute possible. The 2013 chart is nearly identical to 2017. So this is the 2013 chart here. As you can see, we had that run up really fast, come down, then find kind of like a price equilibrium. And the same thing happened in 2017. We had the run up, and then we're finding that price equilibrium now. So what are market cycles? In general, we are speaking about the time period between two highs or lows of a market. In the conservative stock market, such as market cycles happen over longer terms, years on average. The image below shows the cycles of the U.S. stock exchange throughout history, starting from the Great Depression in 1929 up to the current day. As you can see, the stock market has had bull markets for years, and then it has had bear markets. Bear markets are usually a lot shorter than the bull market. But these markets come in cycles. That's the thing. These things happen in this cycles. The last most famous recent lows of the cycles were around 2000 and 2008. They were the dot-com bubble pop and the subprime real estate crash. Is the NASDAQ close to the peak again? Time will tell. As you can see, markets take the stairs up and the elevator down. This is also true for any other financial markets, including the crypto markets. The difference between the conservative stock markets and the crypto ones is the crypto volatility. While a sharp daily movement of NASDAQ is considered to be 1 to 2 Bitcoin, which is considered the most stable cryptocurrency in the base asset, can drop more than 10% daily and rise 17% and vice versa. This is considered usual behavior. You have to look at the psychology of a market cycle. At the top, people are in euphoria, there's thrill, and then there's at the bottom, there's depression. We right now in crypto are in the anger, depression stages. But we will once again get back from the winter, and then we'll spring into hope, optimism, belief, and thrill and euphoria again. We just don't know when. Karen Bennett, writer at cheatsheet.com, has created the most amazing chart. I think this is an awesome chart. You can save this, go to this website. I'll put this in the video, but Wall Street cheat sheet of the psychology of a market. I'm showing the most common emotions people experience as the market fluctuates. These human emotions drive our financial markets much more than the market fundamentals. Meet the 10 stages of a market cycle. The first stage of a market cycle is hope. Hope is the first sign of recovery after the serious disbelief stage. See stage 10 in the cycle. The market is showing positive signs for a new bull run. However, investors are still careful Small amounts of money are being invested. A recovery is possible. That hope starts. And then you have optimism. Optimism defines the second stage where prices are rising as new capital is being invested. This stage is reached when the market has been in a sustained uptrend for many months. The market has a positive outlook, and therefore many investors are comfortable investing money at this stage. As time goes by, we have stage 3, belief. As time goes by, the optimism turns to belief. The stage of belief is defined as one of the first signs of a bull market. Investors seek new opportunities in the market. Stage 4, thrill. Searching for alternative investment options can be a good idea if you know what you're doing. People easily get caught up in the feeling thrilled as they select random projects because they believe nothing can go wrong. Everything is running up. It's important to keep track of your excitement level, as being overexcited is a clear sign for closing a position. Thrill. Euphoria. The end of a huge run-up is defined by euphoria. Human emotions are taking over. Nothing can stop us. Now it's all puppies and sunshine. Only one direction, up. In this phase of the bull run, the stupid money jumps on board the train. This kind of money is the first to leave. At this stage, expect the press to report about the bull market, and you get to meet the new young millionaires articles. At this stage, the smart money is taking profit throughout the parabolic move. Complacency, stage 6. At this stage, the bull run is stagnating as people's lofty expectations are not met. First signs of a reversing market start to pop up. This is a very dangerous stage as people think complacency stage is just a short break before the bull run continues. Many investors are ill prepared for the upcoming market reversal. Stage 7, anxiety. Finally, people become aware that this bull run can't go on forever. They see this market is reversing, losing value and money. The fear of losing lets traders delay the realization of a loss, which turns to much greater losses. Stage 8, denial. However, the value of your investments continue to drop, and many investors refuse to sell, hoping for an even bigger correction upwards. Investors act defensively as they are convinced that they have invested their money wisely. However, generally, almost no coin is able to come out scot-free. When there is rain, everyone gets wet. Stage 9, the market continues to decline as the bear market has become the new reality. Investors try to save their funds by desperately selling their investments as they are afraid to lose everything. Often we see a major sell-off happening at the panic stage. Stage 10, depression. People lose all hope and their belief in the existing market conditions. The market is at its lowest point in the current cycle, as will be noticed afterwards. Isn't that a key word? As will be noticed afterwards. This is where stabilization and consolidation start building again. This stage can take a long time. These 10 stages repeat over time in defining market cycle. Not every market cycle will follow this exact chart, the exact time it takes. However, it should give you some valuable insights into psychology of market cycles. All markets go through cycles over the short term. The duration and amplitude of these cycles are particularly defined by risk, which is very high for the crypto market. However, market cycles are hard to predict, but we do know that markets will not continue up indefinitely or fall to zero in legitimate markets. Passive always reverted to the mean. Bitcoin is not the only one to cycle. Bitcoin is not the only crypto that shows certain market cycles. Take a look at the Ripple chart. You can spot 2 large market cycles and 2 smaller cycles. This is just a part of the altcoin season. It's not limited to just Ripple. Ripple bounced here, down, bounced again. Market cycle trends. There are 2 major trends we generally see in the crypto market cycle. The entry of liquidity is the first trend that we see. New money flows into the market. Most of the money goes to Bitcoin, as this is the entry point of the crypto market. 2, Bitcoin dominance. The dominance of Bitcoin started to decline from December 2017. Many investors were looking for new altcoin investments. This surge of altcoin buying is sometimes an indicator that the market is overbought as people seek new opportunities, so potentially indicates the start of a new decline in the near future. Where are we at in the current market cycle? First, no one knows, and we can only estimate. At the moment, it seems like we are between the state of anger and depression. The image below shows the actual price and market cycles graph. We had a huge correction from the 20K area to 6,000 as of the time of this writing. We can expect the price to remain stable or slightly negative for a while. Is this positive overall? Yes, definitely. This is natural and needs to happen. The feeling of euphoria has bloated the blockchain space. The depression will kill a lot of unnecessary projects. The dumb money creates some room for the stronger real projects that are here to stay. The new, better projects and new smart invested money. What is the best approach to market cycle investing? As market cycle from bear to bull, we believe it is necessary to experience a recovery. It is unlikely that the markets will enter a true bull market until losses from the previous bear market are recovered. The phase of optimism belief can be seen as the entry point of a new bull market. Generally speaking, Buy when the market is weak. Feelings of anger, depression, or disbelief are during a period of depression or accumulation. Mid 2014 to 2015 was a long accumulation period, around $300, and sell when the market is strong. Feelings of optimism, belief, or euphoria. Watch out, because market cycles do not exactly follow this pattern. In some extreme markets, the bear market never fully recovers losses before falling into a bear market. In conclusion, key steps to understanding market cycles. Market cycles are a natural thing, accepted. Cut out emotions, as they can become your worst enemy. Look for both positive and negative catalysts that can trigger a new phase. It is hard to pinpoint exact beginning and end point. Market cycles help analysts make better decisions. Buy low, sell high. As simple as that. Simple as that. Buy low, sell high. Look at the chart. What do you see? Do you see this is a time when the crypto market is low, or is it a time when it's high? Buy low and you sell high. And it's just a discipline. Learn how to be disciplined about your investing and disciplined about your trading, and you will be fine, and you'll be able to trade these market cycles as they come. So thank you for following Knockout Crypto. Follow us on Twitter, follow us on Instagram, follow us on YouTube. Let me know what you think about the video. I want to just go back to this chart one more time to let you know we've been in this bear market for about 9 months. It can continue. The question is, well, how long? It could continue for another year. I mean, I really think the bear market, because we had such a huge run up, it may be another year before we see where we're completely out of this bear. This is going to be a good bear market for a little while now, and it's going to need a catalyst. We're going to need Bitcoin to have a trigger, because Bitcoin is the first sign to crypto recovering. So Bitcoin's going to need a trigger. It's going to need some sort of good news or some sort of trigger to bring it to that, new all-time high. And we could be days away from that. Let me just pull this up too. I think Twitter, Bitcoin highs. Yeah, this is probably Bill. He's a good guy to follow on Twitter. So in the last 3 months of 2017, Bitcoin hit a new all-time high once every 3 days on average. A parabolic bull market. Bitcoin has now gone 268 days without hitting a high. The longest streak ever was 1,176 days from December 2013 to February 2017. So we could be in for a long time before Bitcoin hits high. It could be in for a long time. It could be a year, it could be. But if you have invested in projects that you believe in, you will be rewarded for holding. Gonna do. If you're gonna hold with projects and the technology that you believe in, you will be rewarded. All right, so thank you for following the channel. Let me know what you think about Knockout Crypto and video. Please comment on the video. Please like the video. Please subscribe to the channel. Bottom right hand corner, the red subscribe button. Hit that button. Thank you for subscribing to Knockout Crypto. Thank you for following our channel on YouTube. KnockoutCrypto.com.